This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Big tech climbing in extended US trade as Tesla kicks off Magnificent 7 earnings with a blowout quarter. An ETF tracking the Nasdaq 100 also higher. SK Hynix profit topping expectations. Asian stocks, though, set for a weaker open, with Treasury yields extending gains for a third day. Risks, including slower Fed cuts and the US election, dampening sentiment. Plus, we hear exclusively this hour from the LinkedIn CEO Ryan Roslansky about their plans for growth in Asia and the impact of AI. We are just getting breaking eco data crossing the Bloomberg at the top of this hour. This is South Korea GDP numbers coming through. Year on year, the expectations were for 2%. That fell short of expectations. This is the third quarter number. 1.5% is what we're getting. Quarter on quarter, that seasonally adjusted GDP number coming in at just 1/10%. Expectations were for 0.4%. We've also seen a string of other data that could be seen as significantly weaker. The view on home prices are also weakening for the first time in months, but really that advanced GDP number when it comes to both the quarterly seasonally adjusted as well as the year-on-year numbers coming through lower than estimates. We've also seen recently manufacturers and other sentiment falling. The won has been trading pretty poorly, about a 3-week low against the dollar recently, Shery.
And of course, a big part of GDP gains in South Korea has to do with the semiconductor industry. SK Hynix earnings coming out right now and breaking at the moment. Third quarter operating profit coming in at 7.03 trillion won, which is beating analyst estimates of around 6.9 trillion won for the third quarter. When it comes to the sales numbers, though, a little bit of a miss, 17.57 trillion won. The estimate was for a number above 18 trillion won. We're seeing gross margin for the third quarter, 52%, and we're hearing from SK Hynix that their HBM share, of course, they're the dominant player in high bandwidth memory chips for those advanced artificial intelligence technology. Their HBM share of DRAM revenue forecast to be 40% in the fourth quarter. Again, we are getting those SK Hynix numbers, Haidi. We were expecting really strong numbers given the robust memory chip demand and better average selling prices, and we're getting that in the operating profit numbers.
Yeah, something of a bright spot there when it comes to the South Korea growth story, right? As you said, such an important component when it comes to exports and manufacturing. With that read, and we did also, of course, just get some pretty dismal numbers when it comes to the economic growth, but still emerging from contraction with that chip story, a big part of that. Let's get more from our tech reporter, Annabelle Drewler. So, but what else are we expecting?
Well, I think just the numbers that have come out now are an indication, as Shery was pointing out, just that market lead that SK Hynix has in HBM in particular, and that is a type of DRAM, but it definitely is one that's more expensive to purchase, and so that's why you see that lift coming through in margins. You've seen that improvement of 52%. That was actually above what analysts had been expecting on average. So that's one of the key things to watch. And then, as we were just pointing out there, that expectation that it's going to be expanding and taking an even greater share of the company revenue in the months ahead. HBM, of course, we know it's crucial for building out AI infrastructure. And this is where SK Hynix has been doing so much better than Samsung in this place. And again, that really comes into the sales figures today so far. And as we're just hearing now from the company saying that 3Q sales growth was driven by HBM in part.
How does this fit into, I guess, what we're seeing when it comes to the broader market?
Well, it certainly points to that broader sort of trend that we're seeing in terms of the national sales figures that have been released. So we've had those, for instance, for the September period, exports jumping for DRAM in particular, nearly 60% on the year, and that continues that rising trend that we've had in place since January of last year. Contract and spot prices, those are both sort of hovering around high levels as well for both of those different product types. Something we'll be tracking in terms of the ASP, or the average selling price for HBM in particular, and the improvement that we're seeing there. Again, it's all about trying to generate greater revenue from higher priced products. NAND, on the other hand, isn't doing quite as well. And again, that's perhaps reflected in these numbers just out from SK Hynix. Given that it could have a sort of a bumpy ride in the coming months, there's definitely implications not only for SK Hynix, it's Samsung that again captures the most of this type of chip. And our Bloomberg intelligence team has also been looking at this, but they're saying that even if it looks a little bit volatile right now, it's not necessarily an indication to us of weaker demand moving forward.
Yeah, Bloomberg's Annabelle Drewlers there as we continue to watch SK Hynix results. Third quarter HBM sales up more than 70% from the second quarter year on year, 330% gains. And of course, we'll be watching really the semiconductor space, the tech space in today's trading, especially given that we saw the Wall Street session see losses. The S&P 500 seeing its worst day in more than 2 weeks. But take a look at how U.S. futures are trading because we are seeing that upside coming from big tech right now, leading those gains in the after-hour session, especially with Tesla jumping, posting higher than expected profit in the third quarter as well. It's expecting another strong quarter of delivery, saying it anticipates higher volumes for the full year, and that's really propelling those tech names higher. We'll be watching the Treasury space, especially when cash trading starts at the top of the next hour. We continue to see the global sell-off. In fact, for Treasuries, it's one of its worst losing stretches of the year. It's all about that calculation that the Fed will probably be more measured when it comes to those rate cuts to come. That's propelling the dollar. The dollar has remained steady. But on the other side of the trade, take a look at how the Japanese yen is doing right now, because we're seeing more weakness. We're talking about the lowest levels in almost 3 months. Watch the 152 level for the Japanese yen, which would have surpassed that 73, 153 could be the next breaking point. Right now, we're watching for intervention risks. And the JGB sell-off also here in Japan continuing. In the previous session, we had the 40-year yield touching a 16-year high. We're seeing the ASX 200 at the moment start with losses of 0.2%. But we'll continue to watch the rest of the session, Heidi. Of course, it's really to do with the tech sector and Tesla.
Yeah, take a look at how Tesla is tracking after hours. We did see really higher than expected profit at the blowout quarter on the back of strong sales and credits as well. It does show that that first half slump is fading as the demand rebound comes through, and you see that investor enthusiasm there as well. We're up about just shy of 12% in late trading at the moment. And yes, surpassing those estimates in the quarter, also projecting a slight increase for deliveries for this year, really reflecting a rebound in demand. Our next guest maintains his hold rating for the stock. He's also raising his 12-month price target by $5 to $225. Garrett Nelson is the Vice President and Senior Equity Analyst at CFRA Research. So Garrett, were you as impressed by this quarter?
Yeah, thanks for having me. You know, I think expectations were pretty low heading into the release. Tesla has missed on the bottom line each of the last 4 quarters. And so we think the bar was pretty low. But still, Tesla put up very impressive margin number, 19.8% gross margin. That's the highest margin for the company since late 2022. And so what the results show is that this cost inflation has really moderated, and that really flowed through to the bottom line during the quarter. So we maintained a hold opinion on the stock. We did bump our price target up a bit, but in our view, still a lot of unanswered questions here looking out over the next couple of years.
Yeah, and you said there were scant details, right? Particularly when it comes to, you know, newer models, more affordable vehicles. What would you want to hear to give a bit more conviction on this call?
So Tesla reiterated that they would have first production of some vehicle models in the first half of next year. They said that on the last conference call a few months ago, but there were hardly any details about that at the Robotaxi Day a couple weeks ago. So here they're reiterating that they are expecting first production. And on the conference call, Elon Musk seemed to imply that there's not a separate lower cost EV model. He basically implied that the new model is the Robotaxi that they introduced a couple weeks ago. So I think that's modestly disappointing because there's a lot of confusion among investors thinking there would be this separate low-cost model when in fact it sounds like the new model is the Robotaxi, and that all future Tesla vehicles going forward will neither have a steering wheel nor pedals.
Yeah, what did you think of the robotaxi event? I mean, we are also getting news of a cybercap. We're also talking about this robo-van, a prototype autonomous vehicle as well. When it comes to really all of the Tesla products that we could see in the future, what do you think could be the game changers?
Really, what we saw, these are long-term products. Aside from the robo-taxi, which they're expecting first production next year with volume production coming in 2026, the robo-van, that's a longer-term vehicle model, and we think they're nowhere near producing that. So, in our view, Tesla still has a lot of regulatory hurdles remaining to gain approval of an autonomous vehicle on the road. And they're just starting the process. They mentioned in California and Texas, they'll be applying for permits. But, each state has their own rules and regulations surrounding that. So we think it'll be a lengthy process. Even if Tesla were to have a fully autonomous vehicle bring to market today, there would still be a period of probably years before they would be able to operate that vehicle in all 50 states.
And Garrett, we also heard from Elon Musk in this call talking about the Department of Government Efficiency that he'd like to oversee if President Trump wins the election in November. What do investors make of all of this noise that always surrounds Elon Musk?
I think it's investors have gotten used to it. He's got his hand in so many different jars right now, but he's always been that way. So, I think as long as he remains at Tesla, and it's been clear over the last several years, he has a very capable team there at Tesla, that allows him to get involved with all these other interests that he has. So as long as the team remains focused and they remain focused on the product pipeline that they have under development, I think investors are willing to give him a pass.
Will they continue to give him a pass for some of his political interests? Of course, we've had this, DOJ warning for his voter giveaway offer as well. And to that point, do you think the outcome of the US election makes a meaningful difference in the way that you view this company?
We do have concerns regarding consumer backlash. Wading into politics, obviously, you're going to be alienating about half the population one way or another. So we do have concern about that, what that might mean for sales in the future. But, Elon Musk is no stranger to controversy. Of course, he's gotten in trouble with his tweets before with the SEC, the fines. But, I think anything, as long as he remains at the company, Tesla shares have a certain premium ascribed by the market just due to Elon Musk's presence at the company. He is a visionary, and I think there's a belief that he will create significant value in the coming years as he has over the last 5 or 6 years for shareholders. And so as long as he doesn't get in trouble to the point where it would jeopardize his position at Tesla, I think it's okay.
Garrett Nelson, good to have you with us, Vice President and Senior Equity Analyst at CFRA Research. And still ahead on the Asia trade, Daiwa Securities joins us to dissect SK Hynix's earnings and why they are reaffirming their buy rating. Also ahead, we'll talk investment strategy with JPMorgan Private Bank. And the President and CEO of NEC will be with us to give us his outlook of the AI industry. This is Bloomberg.
As a result of a long period of zero to negative inflation, inflation expectations have been changing very, very slowly. And that was, in a sense, lucky for us in our attempt to normalize policy. although it's still taking time for us to get to 2%.
BOJ Governor Kazuo Ueda there on the central bank's inflation expectations. For more, let's bring Garrett Reynolds, who leads the Markets Live coverage here in Asia. So, Garrett, we're in this sort of funny time when it comes to certainly what the bond markets feel like the Fed is doing, and of course implications then for Japanese assets.
Yeah, the skew for bond yields in the US and elsewhere is very much to the upside right now. Whatever happens in a couple of weeks' time, just under a couple of weeks' time, the US election is held, whoever ends up in charge of the levers of the US government, investors are very much focused on the dangers for higher yields because of strong growth and strong issuance and inflation fears, whoever wins office. So in that situation, that puts a lot of pressure on bond yields to rise. That also puts a lot of pressure on the US dollar to climb, in particular against the yen, but not only against the yen. The euro and the Australian dollar fell markedly overnight. The Australian dollar particularly, that's interesting. That's an economy where the central bank is far more determined to stay on hold than just about anywhere else, and yet the Australian dollar keeps on underperforming with every tick down in expectations for what the Fed might do as far as rate cuts go.
Let's talk a little bit about the Fed, because we were thinking perhaps the economic data recently has been pretty solid. So people were thinking, is the Fed going to really rein back some of that aggressive easing that people were expecting? And yet the Fed's beige book seems to show that the economy is actually slowing.
Well, that's what the beige book says, though there are also some signs in there. We had about, I think, half the districts showed jobs were still growing, even if modestly. More than half of them showed prices are still growing, modestly to a little bit more than modestly. So that balance of, the US economy is showing resilience. Very few have been saying the US economy is going gangbusters, although the nowcast for GDP keeps on rising. But certainly the thing is, the economy is doing well enough and inflationary pressures are lingering to the extent that it's a very big question as to whether you need to cut by 25 basis points a meeting going forward from here, including in this year, but then even beyond. The futures strip has taken out several rate cuts from what's expected over the next year or so, and there's a potential it takes more out. Kashkari the other day is kind of he's a good bellwether for this, in that he still sees rate cuts coming. He thinks it needs to be a cautious pace. He's not sure that you need a rate cut every meeting. And as long as you've got that sort of attitude from the Fed, that's at odds to what the bond market in particular have been expecting, not just when it comes to the OAS strip. When you look at the discount offered by 2-year and 10-year Treasury yields to the cash rate, the bond market has been anticipating, if not a recession, something pretty close to it. And even the beige book, with that sign of some slowdown, is signaling soft landing. The soft landing is the last thing that bond investors were positioning for as recently as a couple of weeks ago.
Garrett Reynolds, who leads our Markets Live Asia coverage. More ahead on the Asia trade. This is Bloomberg.
Boeing's warned they will continue burning through cash in the first half of next year as it tries to ramp up production again. Third quarter results were in line with low expectations, and investors are now waiting for striking workers to vote on a pay deal. Our aviation reporter Danny Lee joins us now. First of all, just break down the numbers for us.
Yeah, good morning, Shery and Haidi. So we've got revenue that missed estimates, unsurprising in terms of the financial performance this third quarter. We also got a negative free cash flow of $2 billion, and that takes the overall deficit this year to $10 billion. And this is really sums up a difficult year for Boeing, given what we saw in terms of the accident with an Alaska Airlines jet at the start of this year, then the cap on production enforced by regulators, and then this management upheaval. And it's now this management upheaval and this change that new CEO Katherine Tai is trying to instill and drive this company out of its deep black hole is what's focusing minds on investors. But also on top of that, what is focusing minds for investors is this strike, which will get a result in the next couple of hours. Something that, will this strike, will this pay deal that the unions will, whether they will accept, is going to be a very critical one.
How intense is the cash burn going to be, and what does that tell us about sort of the prospects for how long this recovery will take?
Yeah, the cash burn is going to last into at least the first half of next year before it turns positive into the second. But that kind of underlines the challenge that Boeing faces in terms of getting its house in order. And that's something that Katherine did try and signal very clearly to markets, in that they will have to review everything. And they will, for example, keep the commercial aircraft jet business in defense in terms of the products it will continue to make. But everything else is under review. Clearly, it's had a difficult time in the space unit, but still going house by house, looking at everything it's doing, and Katherine signaling that Boeing will ultimately have to become smaller in order to be better and more focused.
So, Danny, any idea at this point how that vote by striking workers could go, and what happens if they reject it again?
This vote really is on a knife edge, and because of the strains between Boeing and the union and the disagreements in the last 6 weeks on what kind of offer is acceptable to workers, it's really hard to tell whether this will be approved by Boeing's largest union. The 33,000 workers really wanted massive changes, such as on pensions. They haven't got that. They're only getting what is going to be potentially a 35% pay raise over 4 years. So if this fails, this will further put strains on Boeing's finances and will kind of signal the urgency that someone like Katherine will need to make the changes in terms of cutting potentially more jobs and trying to preserve the cash going forward.
Bloomberg's aviation reporter Danny Lee there. Let's get you caught up on the corporate front. And Bloomberg's been told that TSMC has halted shipments to a client after discovering that its chips found their way into Huawei products. Sources say the chipmaker has since notified the US and Taiwanese governments of the incident and is investigating. Huawei has been on a US sanctions list since 2020. IBM fell in late US trading after disappointing sales for the third quarter, hurt by slowing consulting demand. Revenue rose 1% in the period, just missing analyst estimates. IBM's CFO says clients aren't expanding budgets and some generative AI projects are coming at the expense of traditional consulting. More ahead on the Asia trade. This is Bloomberg.
This is the Asia Trade. Vladimir Putin says the BRICS grouping shows that a multipolar world is being created to challenge the U.S.-dominated global order. The Russian president hosted leaders of the newly expanded bloc this week. Putin says more than 30 nations are interested in joining the group, but current members are split over the idea of further expansion.
The BRICS states stand united in their support for intensifying cooperation in the global arena based on the key principles of the UN Charter, and jointly strive to contribute in every possible way to the formation of a fair multipolar world order with the decisive participation of the countries of the global south and east in the systems of international governance.
Chinese President Xi Jinping and Indian Prime Minister Narendra Modi held talks on the sidelines of the BRICS summit in Kazan. Xi told Modi the two countries should properly manage their differences over disputed Himalayan borders. It's their first bilateral meeting since 2022 after easing a 4-year border standoff earlier this week.
Shery, take a look at what we're watching when it comes to commodities trading at the moment. Of course, oil on watch as we continue to monitor the situation when it comes to the Middle East. We know that Secretary Blinken met with the Saudi leader to try and ease some of these aspects of the conflicts with Israel, and of course in this ongoing effort to reach a ceasefire. Both in Gaza and Lebanon, we're seeing oil trading pretty steady at the moment, although Brent seeing downside of about 1.5%. It was a retreat in the previous session. Traders just reassessing these tensions in the Middle East, but also looking at the expectations and outlook for market balances as we head into 2025 as well. We had that drop come after data showing that US crude inventories rose by more than 5 million barrels last week. Also watching some of the other metals pictures as well. For iron ore at the moment, we're seeing upside of about 0.6%. Fortescue's iron ore shipments rising by 4%. We're seeing miners there ramping up supply and watching a little bit of downside at the moment when it comes to trading in copper. Some of the other stories that we're following at the moment, US officials say North Korea is sending troops to Russia, confirming the movements for the first time. National Security Council spokesman John Kirby says about 3,000 North Koreans are training at 3 sites in Russia. Defense Secretary Lloyd Austin says there is a serious possibility that they will be sent into combat.
We are seeing evidence that there are North Korean troops that have gone to Africa. Now, what exactly? Not Africa, but Russia. What exactly they're doing, left to be seen. These are things that we need to sort out. We'll have more for you on that later. But yeah, as we continue to look at this, there is evidence that there are DPRK troops, in Russia.
Hezbollah has confirmed that a likely successor to assassinated Chief Hassan Nasrallah was killed in an Israeli airstrike around 3 weeks ago. Hashem Safieddin was a key player in Hezbollah's founding and led the militant group's executive council. Hezbollah has seen almost all its leaders killed by Israeli strikes in recent weeks.
A new Bloomberg News Morning Consult poll shows the presidential contest between Donald Trump and Kamala Harris could hardly be tighter. The candidates are statistically tied among likely voters in each of the 7 swing states, and they're entering the final weeks of the campaign, scrapping for every undecided voter. Our political news director, Jody Schneider, joins us now. And Jody, this seems to be a race for anyone to win. What are the candidates doing to try to move the needle?
Yeah, it really is, Shery. We are seeing this is a statistical dead heat, 49% to 49%, up and down a little in each of those 7 swing states, but really kind of a knife's edge there. We've seen in the poll, which we've been doing all this election year, we've been seeing sometimes former President Trump has been up, sometimes Vice President Harris has been up, and before her, the former president, the current president, Biden, was up when he was still running. But now it really is at this dead heat, which is what we've seen in the last poll as well. They're both out there stumping. Those 7 swing states are the prize. The rest of the country is kind of viewed as either really in the Harris camp or really in the Trump camp. And the popular vote isn't the big prize. It's the getting those electoral college votes, getting to 270, which is what you need to do to become the president.
When it comes to the economy, well, first of all, is that the most important issue, and who's being seen as leading there?
Yeah, it still is, Heidi. It really is viewed. Inflation is still a concern of many voters, even though it's been coming down. And the economy is generally viewed as being strong. Unemployment's low. We've kind of had this soft landing. The Fed has started, cutting rates again. However, many people don't feel that. They feel it every time they go to the gas pump. They feel that they are paying a lot every time they go to the grocery store. And Donald Trump has been making.
Hi, Jody. I'm not quite sure if we still have you. Right, Heidi, it
I
seems
think
that
we've
lost
just
Jody
lost
Schneider
Jody,
there, but of
Shery.
course, we're just discussing how close and tight that race was in the United States. Of course, we'll continue to follow that November 5th, the elections coming up, Heidi.
Sure, it feels like we have been previewing and covering this election for years now, really, but we are now officially just 2 weeks out, or just under 2 weeks out here in Asia. And you can see that really being reflected when it comes to risk appetite or receding risk appetite in the markets. Of course, what we're seeing when it comes to the global bond sell-off is not helping sentiment much either. We do have, just about 36 minutes of that staggered start to trading underway here in Sydney. A little bit of an off day when it comes to trading here, about 0.3% lower there. We are watching, of course, some of the miners and some of those China-exposed stocks there as well, as the doubt continues to play out as the resilience of that recovery after the stimulus announcements. We'll be watching a lot of that tech space, of course, Mag 7 earnings getting off to a blowout start with the big quarter being announced by Tesla there. We also have SK Hynix posting record profit after that AI demand story continues to power on when it comes to that growth cycle. Singapore Nikkei futures, though, looking pretty soft at this point. We're seeing SME futures just modestly to the upside at this point. More ahead on the Asia trade. This is Bloomberg. U.S. Trade Representative Katherine Tai says the Biden administration is committed to inclusive trade policies despite efforts to crack down on alleged Chinese overcapacity. She spoke to us at the Bloomberg New Economy event in Brazil.
In terms of the path forward and the work that we have to do as the United States in partnership with our friends and neighbors, I think that we have a lot of common ground to be thinking about how you use trade policy and trade tools to develop, enhance, and reinforce inclusive economic institutions.
I guess a lot of people listening to this will see here something that we see quite a lot in the Biden administration. It feels like there's an intellectual structure being built to defend a basic sort of political impetus, which has been led by former President Trump, that we just don't want Chinese-made cars flooding the US, whether it's from Mexico or from China. And he doesn't talk about the resilience of supply chains. He just says he doesn't want them and he's going to put 1,000% tariffs or 200%, it varies. I know you can't get into the campaign itself, but it feels like a lot of this is all about trying to make it harder for Chinese cars to get into the US one way or another. And ultimately, that's also going to trigger a review of the trade agreement.
Well, Stephanie, I feel like the way you've posed that question, while very, very friendly and with a smile, is in a way challenging whether or not I've been lying to you for these 20 minutes. And I just want to say...
Providing an intellectual justification for a political policy.
I mean, I think if that's what you've taken away from this conversation, you've really missed everything that I've just said to you.
Okay.
Which is, it's an intellectual framework that is placed in objectivity, that is not xenophobic, that is not about keeping the PRC down, but is about growing inclusive economies at home so that the parts of our population and our fellow Americans, our fellow Brazilians, who are really struggling today, struggling even more than they were before the pandemic, before the great financial crisis, and before the takeoff of this era of trickle-down trade policies has hollowed out significant parts of our economy. And I know that in Brazil, there is a huge, huge outcry when major auto manufacturers pulled out of Brazil and shut down production here. Those are not political. Those are about economics, it's about livelihoods, and it's about the ability of a democracy to deliver livelihoods and hope for its people. That is the whole point of a democracy. So let me just end there to say that an intellectual framework that we've put forward is undergirded by President Biden and Vice President Harris's deep conviction that our democracy and its economic promise, that these are the most important elements of what we have to deliver to our people. In trade for a very, very long time, we've been concerned by the indications that we've seen of growing economic dominance of the PRC economy in the global economy, as represented by industries that have been grown strategically and intentionally, not just for dominance within the Chinese economy, but for global marketplace domination. We've seen that in steel, we've seen it in solar, we are now seeing it in EVs and batteries. And what I think is really interesting about today in 2024 is that across our administration, whether you're the US Trade Representative, you're the Secretary of the Treasury, whether you're the Secretary of State or the Director of the National Economic Council, we are all focused on this challenge of Chinese overcapacity, excess production.
U.S. Trade Representative Katherine Tai speaking with Bloomberg's Stephanie Flanders there. And we also had earnings results from SK Hynix posting a record quarterly profit and revenue, reflecting really strong demand for memory chips. The chipmaker's shares have gained more than 35% this year already. Our next guest has a buy rating on Hynix, but has lowered the 12-month target price for the stock to 230,000 won. Joining us now is SK Kim, Executive Director and Analyst at Daiwa Securities. Great to have you with us. Just first of all, give us your reaction to the numbers.
Yeah, I think they just announced the results, and then they also announced the press release. So I think it is some earnings surprise because of the not only it outgrow the market consensus, it provides that it's HBM portion way higher than the anticipation. So despite that the shipment is lower than expected. But ASP increases are higher than the consensus estimate and my estimate. So we see more the faster shift to AI, and then AI will be meaningful their contribution to its earnings. Yeah.
We're still waiting for the Blackwell supply coming from NVIDIA. Is this going to be a downside risk for SK Hynix?
Yeah, actually, we think there's some delay of the Blackwell production was a concern, but the company within the press release they guided for this HBM revenue portion within DRAM will go up to 40% in Q4 from 30% in Q3. That was actually higher than my estimate. So we see the further upside in their earnings for Q4. Thanks to the shift to the AI memory.
How do you expect that momentum to continue into the fourth quarter and into next year?
Well, next year we see some, why we see now the solid robust demand for AI will continue because the Blackwell and also TSMC is adding the CoWoS capacity, but clearly there's a signal of the decline in the commodity price. So we see increased supply from Chinese local makers. And also recently, I heard the Chinese memory makers start to produce HBM as well. But I don't expect a meaningful impact, but there's more pressure on the pricing. But the AI demand, especially the HBM and the enterprise SSD, that demand will support SK Hynix. We still believe the earnings will improve next year compared with this year.
They've already suggested that CapEx will top earlier plans and expectations, right? What are you watching for in terms of investment?
Yeah, the increased CapEx is a concern. We see SK Hynix is increasing CapEx for this year and probably next year. But it seems that they plan to delay some ramp up of the new line M15X from end of last year to 2026. That is some positive. But yeah, so increased capacity. We also see Samsung is increasing CapEx in response to the SK Hynix and Chinese. So that some increased CapEx remain a concern.
SK, what does the fact that you also pinpointed to how the HBM share of DRAM revenue will actually increase to 40% in the fourth quarter. What's the significance of this when it comes to the broader product that SK Hynix owns and the future of their business?
Yeah, clearly, when Samsung announced the pre-earnings result 2 weeks ago, they guided that there's some delay in the supply of HBM3E to key customer. So we assume that is NVIDIA. So that means Hynix will maintain a majority share for the A-type HBM3E for Blackware. So the assuming that Blackware, the ramp up is now production is on track, we expect a meaningful increase in the shipment of the HBM3E in Q4, the following Q3. And also it will start supply of, I think the volume will be small, the next generation of the product, the 12i HBM3E from December this year. That will also contribute to their earnings, some portion.
You mentioned how Samsung, of course, is falling behind when it comes to these supplies. But for how long can SK Hynix actually be safe from broader competition? As of now, we are already heading to end of this year. So it looks like we have a visibility until next year. Given the shift to 12i HBM3E. So actually now we anticipate more competition from HBM4. But the thing is that we need to see the HBM4, the timing of the ramp up. It could be delayed. It depending on the Rubin platform. That's something we need to see. We are hearing that the memory suppliers are a little bit conservative in demand for 2026 for HBM demand.
SK Kim, really great to have you with us as always, Executive Director and Analyst at Daiwa Securities. More ahead on the Asia trade. This is Bloomberg. Some of the corporate headlines that we're following this hour. Luxury retailer Hermès is expected to show the impact of the industry spending slowdown in its upcoming results. Analysts expect the weakest quarterly sales growth since 2021 on slowing Chinese demand. Bloomberg Intelligence says while Hermès is traditionally more resilient to consumption weakness, even forecasts for about 10% organic sales growth are optimistic. The French fashion group Kering warning that its annual profit will slump to the lowest since 2016. Again, weak Chinese demand hampering its biggest label, Gucci. Kering expects only $2.7 billion in recurring operating income, which is below analyst expectations. Comparable sales at Gucci slumped at 25% in the third quarter. Bloomberg has learned that Apple is nearing the production of its updated MacBook Airs for release early next year. Sources say the latest models will look similar to the current design, but include the new M4 chip to speed up performance and better handle AI tasks. The products will follow a wave of new Macs that are coming next week. Shery.
And Haidi, LinkedIn now saying that the labor market is brimming with change thanks to the rise of AI. CEO Ryan Roslansky told us exclusively how the new technology is being used in career development as younger users feel a content shift.
So I think a couple of trends that we see right now are across the board, just the need for people to really upskill in what they're doing. AI skills, but also human skills, I think are really in high demand across the board. For the first time on LinkedIn, we're seeing a lot of growth outside of kind of the core knowledge worker, and that's especially happening in India and Indonesia. So small business owners, freelancers are really starting to gravitate towards the platform. So, the more people that join 7 per second, just the more insights we have across the globe. And it's really interesting to see those patterns. But, for me, really the idea that, again, if you're not changing your job is even changing on you. It's just a really important thing for people to grasp right now, especially as AI takes more shape in the labor market.
So is the labor market resilient, for example, in the US? Is there any indication to show that it is?
I think across the U.S., it feels very resilient. It feels more resilient in certain sectors like healthcare and manufacturing. It felt less resilient a year ago in tech, but tech's feeling much more resilient, especially in the AI sector, especially in Silicon Valley than it did a year ago. So I'm seeing some decent strength in the U.S. market right now.
So you talk about how the Asian market is really strong, and I can only imagine you want to grow it. What is the strategy that you want to implement in this part of the world?
One of the things I've learned for sure on this trip is just how important small businesses are in Asia. We've historically, focused the LinkedIn platform on our customer base on larger enterprises, and for us to really break through in Asia, the focus on small business is going to have to be a key. Then secondly, the labor force in Asia is, it's just a much younger labor force, a labor force that is used to navigating any product, any kind of social product through video is the medium by which they consume or share content. So a real push into video as well, and short form video on LinkedIn is going to be an important way to help professionals stay informed on the platform, make connections and grow their network through video as the medium.
Right now, there's a lot of focus on the US election and perhaps AI generated misinformation. How are you countering that on your platform?
To a large extent, LinkedIn exists as a platform to create economic opportunity. What you share on LinkedIn is attached to your real identity, your resume online. So we don't face a lot of the issues that a lot of other platforms may face where there's not real identity. But to the extent that, we still have a lot of the same, trust in place across the board, through AI and human review, things get reported. But there's not a lot of political content on LinkedIn. In fact, in 2018, we actually, disallowed political advertising altogether on LinkedIn. So it's not really a place where, politics are happening.
We have the market opens in Seoul and Tokyo next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after a down day on Wall Street, Haidi. But the after-hour session has looked pretty exciting. Tesla jumping on its results. And of course, we had SK Hynix as well, really posting those record profits and revenue.
It could be interesting implications when it comes to this tech rotation or rotation out of the mega caps, right? Particularly, Shery, of course, we're now just 2 weeks out from the US election. You see some of that risk appetite just being pulled back, particularly in light of what we're seeing across the bond sell-off.
Yeah, that Treasury sell-off has continued, one of the longest stretches of losses this year already. That's actually hit JGBs as well, as we had the 40-year yield really rising to that 16-year high. Take a look at the market opens here in Japan, because we had seen some losses in equities markets, and we had seen the Nikkei fall for 2 sessions. We continue to see the downside pressure early in the morning session today as the market opens. The Japanese yen holding at that 152 level, the weakest level in almost 3 months against the US dollar. We heard from Governor Ueda about the normalization path being one of those issues that keeps him up at night. But we continue to, of course, try to calculate where the BOJ goes from here in its tightening path, where the Fed goes from here on its easing path. And really, that's leading to some changes in the currency space as we continue to see Asian currencies being pressured. Take a look at how the Korean won is also trading at the moment, because it was at that 3-month low against the US dollar as well. We're seeing the Kospi and the Kosdaq losing about 0.4%. We're watching SK Hynix, record profits, record revenue, but at the same time, of course, it's already rallied about 49% year to date, Haidi. So we will continue to see if the gains that have been sustained this year can actually be maintained for this chip maker in South Korea.
Shery, take a look at how we're trading just an hour into the session here in Australia, and we are seeing a little bit of an edging lower when it comes to the ASX. Some of the leaders when it comes to those losses are mining and the banking sector, seeing some slippage there, about 0.2% there. We're also watching the Aussie dollar. Of course, the US dollar is the big driver in this story, that best path to the best month in years being fueled by the election risk, by this sort of recalculation of Fed expectations, and that is creating a bit of weakness. The Aussie lost about 1% of the previous session and holding at that 66 US cent level. But of course, we spoke about the big Treasury sell-off, and Australian bonds, after falling the most in 5 months as part of this global debt sell-off, continues to see really some of that volatility. 10-year real yields headed for that 1-year high. In particular, we're also watching when it comes to New Zealand, given that we did have a little bit more of a glean into how the RBNZ governor is thinking. The Governor Orr giving that speech on monetary policy in Washington overnight, saying that when it comes to inflation, lingering price pressures, they're still thinking about them even as they've embarked on this rate cut cycle to reflect a lower inflation outlook. That uncertainty about price setting behaviour for New Zealand firms and the persistence of inflation very much at play there. And Shery, we continue to watch commodities as well, in particular gold stocks declining across the region, Newmont missing estimates. We're seeing some of that risk play there as well.
Yeah, let's go directly to SK Hynix because it's trading right now down more than 1% after posting record profits and revenue. Of course, we had strong demand for memory chips used in AI development and enterprise solutions, but at the same time, we had the revenue side sort of missing expectations a little bit, although profit did exceed estimates. Let's bring in Asia Stocks reporter Yu-Young Lee for more on this. Yu-Young, so what do you make of this market reaction?
Sure. Good morning. So SK Hynix stocks are starting weaker this morning, and that's probably tracking the losses that we have seen overnight in the U.S., including the likes of the NVIDIA and other U.S. chip stocks overnight. And also, we have to have in mind that the South Korean chip makers saw pretty big gains yesterday after the report that the South Korean lawmakers are looking into the measures to support the chip industry next week. So there might be some profit taking. And another thing to keep in mind is that today's result, although it was the record quarterly record, it was not unexpected. A lot of investors and analysts were expecting SK Hynix to post operating profit at nearly 7 trillion won, so slight above the 7 trillion won. It's a great result, but it's not a huge surprise. I think that's how the investors are taking, and probably today is a good day to take profit from the record quarterly earnings.
What about being able to sustain this momentum to come? What are the kind of key aspects and themes that you'll be watching out for?
Sure. So if you look at SK Hynix, it's been rallying throughout the first half of this year thanks to this global artificial intelligence boom, and this because it supplies the key HBM chips for the NVIDIA to make its AI processor. So, but that momentum has been lost a little bit toward the second half of this year when some of the analysts have been downgrading their views on the SK Hynix, and that was because the legacy DRAM that relies on the demand from the consumer PCs and mobile phone have not been seeing strong demand from the market. So that's partly why the chip makers like the SK Hynix or Samsung Electronics have been pressured toward the second half of this year. But what investors will be watching from now on is the global consumer demand and demand for AI this for the rest of the year and also for the next year. Now, if you look at the operating profit estimate trajectory for the 2025, it was pretty high earlier in the year, and then we saw steady downgrades of the 2025 operating profit estimates for the likes of the South Korean chip maker SK Hynix and Samsung, and that's partly explained why the stock has not been performing as well as such as a TSMC, which has been near the record, or NVIDIA, which is also holding near its record high level. South Korean chip maker, even though they're still up about 40% so far this year, if you look at SK Hynix, it's still down about more than 10% from its peak earlier this year, and that's partly because there are some concerns about the high inventory of the chip and also the consumer demand for the PCs and the smartphones around the world.
Our Asia stocks reporter, you can lead there. Let's bring our next guest, who's long when it comes to US tech stocks. With us now is Julia Wang, who's a global market strategist at JPMorgan Private Bank. Julia, great to have you with us. And it's interesting, right? Because at the same time, we are seeing what looks like a meaningful rotation away from mega caps. If you take a look at these numbers from SK Hynix, does it give you more conviction that the exuberance over global AI demand remains intact?
Hi, good morning. Thanks for having me. So we're definitely still a very high conviction on global and U.S. included AI themes. And I think for the near term, we see two important tailwinds. One being that we're halfway through earnings seasons, and so far the validation on AI-related spendings has been very strong. And we also know from just looking at anecdotal evidence that consumer demand for future AI-related development is also, consumers are very enthusiastic. So I think that this goes back to our longer-term belief that this AI revolution will be a 3 to 5 year process at least, and it will be a very, very big development for global markets and also for the U.S. market. And second tailwind we see is that we do believe that some of the near-term disruptions that we see coming from higher U.S. yields, the relentless march of U.S. dollar, et cetera, there are denting some risk appetite, but we do think that Treasury yields are marching towards a level almost closer to the upper limit of what really makes sense over the medium term for the U.S. economy. So even when that yield starts to drop, it will be another added tailwind for technology, in particular for AI, which is the biggest driver of growth. So I think that you talked about it earlier, that we are in an environment where some of the Treasury yield move and the relentless move in the dollar have clouded dented investor risk appetite. But we are looking at the medium term, and we see no reason why this shouldn't be a great buy on dip opportunity for investors who want to be positioned for this development over a 3 to 5 year horizon. And you mentioned earlier, we really like the U.S. AI names. We also like some of the Asian names as well, particularly because they've been pulled back a little bit because of the cyclical part of their businesses that haven't been performed well. But if we do come to a global environment where global demand is actually better, not worse, compared with this year, then some of that business could actually recover as well. So we do like this theme across the world at the moment.
Yeah, Julia, tell us a little bit more about the preferences when it comes to Asia exposure, because I know you're still long Japan equities, and how potentially volatility, in 2 weeks' time from the US election result could play into that.
Yeah, we still like Japan. I think that the virtuous reflation cycle is very much intact if you look at economic data, if you like how consumers and corporates and business leaders have been talking about the economic situation in Japan. That development from deflation to reflation is still there. That said, I do think that what investors have been focused on recently are some of the near-term event risks. Japan has its own local parliamentary election coming up. They also have the BOJ meeting next week. And you mentioned earlier, Ueda said that normalization keeps him awake at night. I think that dollar yen, the relentless march upward in dollar yen may eventually become something that keep risk asset investors up at night as well, because it's just been too rapid a move. And I do think that these are some of the things that are adding to risks for next week's BOJ meeting, and that just becomes something that investors have to see through before they feel more comfortable. And of course, we also have the U.S. election as well. So there's just a lot of event risk, I think, at the moment that's clouding investors' outlook for Japan. But I think the fundamentals are still very supportive, so we would still be adding on the pullback from here.
When we talk about those risk events for Japan, what could be the pass-through? Are we talking about potential tariffs if there is a Trump presidency? Are we talking about the volatility in the Japanese yen given what the Fed is doing? What could be the meaningful impact that could change the outlook for Japanese equities?
I think that Japan's monetary policy normalization in the near term is the thing to watch. And partly because of how rapid dollar yen's move has been in recent weeks, and we're approaching. At this rate, we're going to be approaching 160, which was the level that they last intervened. So I think that this is something investors are watching very closely and may well be regarded as a near-term ceiling for how risk sentiment can perform. I do think that the election risk is an event risk that we all have to get through. And of course, there are divergent outcomes to some degree. Having said that, Japan is, of course, is very sensitive to global trade environment. That said, we're also seeing some sign of bottoming out in China demand, and Japan could benefit from that as well. And we do think that regardless of how you envision the global environment, Japan's manufacturing sector still has a very strong competitive edge in the sectors, and they virtually dominate some of those sectors. So we don't think their competitive edge will be completely eroded, even if we head into some global trade uncertainty. So I think that the near term probably is a bigger watch for us. It's really dollar-yen and how the BOJ or the policymakers in Japan reacts to it.
So just quickly, Julia, talking about the bottoming out when it comes to China, what are your expectations of the markets there? We had the CSI 300 gaining ground in the previous session, but at the same time, of course, it's really what to do with investor expectations of what's to come on monetary and fiscal policy.
Yeah, so I think it's probably going to be somewhat of a trading range in the near term. I think we've seen quite a bit of re-rating of Chinese equities, partly because policymakers have done a course correction, and they added a bit more. They recognize the need for a bit more reflation for its economy, and investors regarded that as the right move. So the re-rating has happened, and now that market are consolidating a little bit to look ahead as to what exactly policymakers will do to reflate their economies next year. So our view is that it might be a gradual reflation process because they're still trying to respect some of the structural changes they're making to the economy. So we don't think that we're going back to a very rapid reflation. It's more likely going to be a gradual one, and that may be maybe one of the views out in the market, but all the investors are waiting to see what directions we go, and of course, how global environment really look like next year. So we do expect some modest upside next year for the market, but I think for the near term, it's a bit of a holding pattern.
Julia Wang, good to have you with us, global market strategist at JPMorgan Private Bank. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how some of these suppliers for Tesla are trading in the Asia session after the company posted a higher than expected profit in the third quarter. So we actually saw Tesla jumping in the after-hour session. It's expecting another strong quarter of deliveries. It's saying that it anticipates higher volumes for the full year. For more on Tesla's latest earnings, our EV supply chain and aviation reporter Danny Lee joins us now. Danny, should we start with Tesla's numbers? How positive are they?
Yeah, Elon Musk and Tesla overperforming and over-delivering and delighting Wall Street, really, in fact, and really kind of starts to indicate a turnaround for the business after a couple of quarters of being in the doldrums. That then was driven by weak deliveries. This time, what we heard from Tesla is restating its full-year delivery guidance, unchanged from what it said earlier. But that means it could potentially sell 500,000 vehicles in the final quarter, and that'll be the first time it's done that, potentially a record. So clearly there is some momentum for the company, so we'll see if it does really mark indeed a turnaround. But in terms of the Wall Street results, we got 72 cents per share. That was more than the 60 cents guided and estimated for. And even on free cash flow, that was at the highest in 2 years. So pretty strong set of numbers. And you saw that with the stock reacting positively, up initially 10% post-market, and then up 12% once Elon Musk on the earnings call started talking and being very confident about the future outlook of the business.
And another story that you're tracking, of course, is Boeing. The CEO saying it'll take some time to fix. The losses are still piling up. We're, of course, still watching the labour situation there as well. What jumped out to you here?
Yeah, I mean, Kelly Ottberg, the new CEO, couldn't contrast more with what Elon Musk is like. Kelly Ottberg laying out really the changes that are required for Boeing, given the weak performance, the miss on revenue, and the the growing negative free cash flow that they're facing. And so they're going to have to look, Katie Ottberg said, house by house, whilst they're protecting the commercial aviation and the defense businesses. Everything else is up for review, and particularly as they look to be smaller but much more focused and better in producing its products. And so we will wait really for what is going to be a crunch vote in the next couple of hours, this result, which will determine whether Boeing's finances can be put into slightly more predictable shape than with the workers currently striking, and so therefore some of its most profitable aircraft cannot be produced and delivered. It's been a difficult time for Boeing, and so therefore this strike outcome and the result of that, whether we see an end to this 6-week industrial action, will be a closely watched thing.
Yeah, and Danny, ahead of this crucial vote, what are the expectations being set here? What are the ways that it could go, and what the next steps would be?
It's so hard to decipher whether we actually get this passed from the 33,000 workers, given the animosity that has been created between Boeing and in the way in which it's approached the 33,000 members of its union, and clearly the demands that it wants, 40% pay rises over 4 years or so. Boeing has been offering incrementally 25 and 30 and 35%, not really enough, particularly as it wants more fundamental changes to things like pensions. So if Boeing doesn't get the outcome it wants today, clearly it's going to have to go back to the drawing board. We'll see another week or two potentially or more of this industrial action. And that really sets in motion the need for someone like Katie Ottberg to get Boeing's house in order quickly and to keep on preserving cash, because we then just don't know when this strike will end.
EV supply chain and aviation reporter Danny Lee there. More ahead on the Asia trade. This is Bloomberg. This is the Asia trade. Vladimir Putin says the BRICS grouping shows that a multipolar world is being created to challenge the US-dominated global order. The Russian president hosted leaders of the newly expanded bloc this week. Putin says more than 30 nations are interested in joining the group, but current members are split over the idea of further expansion.
The BRICS states stand united in their support for intensifying cooperation in the global arena based on the key principles of the UN Charter, and jointly strive to contribute in every possible way to the formation of a fair multipolar world order with the decisive participation of the countries of the global south and east in the systems of international governance.
Well, the leaders of China and India have met for the first time in 2 years after easing a border dispute this week. Those talks came on the sidelines of that BRICS summit. In Russia, our Bloomberg reporter Swati Pandey joins us now, and the thawing of that relationship was really one of the most closely watched at this set of meetings.
It is quite critical and important, I would say, for the region. But also China and India have had frosty relationships since 2020, when they had a deadly clash near the Himalayan borders. And China is often accused in India of nibbling into India's borders. Which is why this is important, also because both of them are now claiming to be the leader of Global South. And while China has once a more leadership strategic role as an anti-West or anti-US power, India has been non-aligned. So I think there is still questions around how much this thawing of relationship means for the region, but it's definitely a positive step.
What's sort of the trade relationship and the economic relationship between these two, obviously hefty trading powers?
Yes, for the region, it will be really important that the two countries are aligned. In I think since 2020, Modi took this symbolic step of banning some Chinese apps, and there has generally been this anti-Chinese goods movement as well within India to ban goods or to kind of encourage people to buy domestic goods. So prefer Make in India, and Make in India is also a big campaign for Modi. So, but obviously China is a big trading partner. India does import a lot of stuff from China, as does the rest of Asia and the rest of the world. So that whether that relationship improves or not also is a question mark as a result of this. But ahead of this meeting, the two countries also signed an agreement that will allow them to patrol the border. The details are quite unclear at this stage. So again, there are a lot of question marks still around what this meeting means and whether it's just talk or whether it's going to translate into actual action, into actual trade, and into proper stability and peace in the region as well.
The BRICS grouping has become such an important part of geopolitics now. Any other notable events in the summit?
I have actually not been very closely watching the summit, but what I can tell you is that the BRICS group has expanded now with UAE and Ethiopia, Iran, Egypt joining it as well. And they are trying to create this as an answer to U.S. power, which is what we heard earlier, Putin talking about the multipolar world. And this is something that Xi Jinping and Narendra Modi, India's Prime Minister, said as well. The difference is that India still remains non-aligned and is one of those countries which is also in Quad, but also part of Shanghai Cooperation, which is largely China and Russia. So it's quite interesting to see that position that India has at the moment. It wants to be friends with the US, but it also wants to be involved in this BRICS summit as a leader and sees itself as the leader of South Asia or the global South, and at the same time does not want an anti-US or anti-Western kind of rhetoric.
Bloomberg reporter Swati Pandey there. Let's take a look at commodities very quickly, how we're trading at the moment. Bit of a bifurcated sort of sentiment there when it comes to oil, as we continue to see just that steadying trade, now reversing those losses after the Wednesday drop. That supply outlook in focus.
Right, we're getting breaking news at the moment out of Japan. The PMI composite number coming in for the month of October, preliminary number 49.4, which is below the 50 level of expansion. Also, when it comes to the manufacturing PMI, 49 is the level, so it's not really doing very well as compared to the previous number. Services as well at the moment, 49.3, so three numbers right now in contraction territory for the October preliminary numbers. Right, let's take a look at some of the big movers also in the trading session today. Take a look at how Korea Zinc is trading at the moment, gains of more than 27%. And this is after the company's buyback offer has ended. Remember, the chairman, Choi Young-bom, actually had gathered a larger stake with his offer to buy back up to 20% of the stock. Well, that ended on Wednesday. We've been seeing this fight for control when it comes to the top shareholder trying to launch an unsolicited cash offer to buy control of the company. We're also following 7&I right now. We are now hearing from the CEO, Ryuichi Isaka, speaking at Investor Day, saying that they want to emphasize continuing global growth. This is, of course, another company that we're following on potential merger talks, of course, with Couche-Tard as well from Canada. SoftBank down at the moment, down more than 3%. We know that, of course, they own the majority of ARM, and ARM has recently canceled Qualcomm's license to use its intellectual property to design chips. In the meantime, staying here in Japan, our next guest runs Japanese IT services provider NEC. It traditionally focused on hardware such as PCs, but is transforming into a systems integrator with a focus on biometric recognition and AI technology. We're now joined by NEC President and CEO Takayuki Morita. Great to have you in studio today. Thank you so much for joining us.
Thank you for having me here.
Let's talk a little bit about your business, because you've gone through this amazing transformation from hardware into software, digital solution services as well. Not to mention that your defense business is doing very well. Walk us through that.
I think as to the 30 years depressions and also the IT crashes and in Japan, we were forced to sell and exit the business, maybe 2/3 of the businesses. But while we are continuously investing into the software and our strong areas, and that is helping us to transform the companies into a more like a software system-oriented companies. And thanks to the recent budget increase by Japanese government and for the defense areas, that is also helping us to grow and in a more healthy situations.
Especially as we continue to see a lot of geopolitical risk around the world, how big of a factor will defense spending be for your business?
I think there are two things. And like a budget for the defense itself is growing, but at the same time, importance of advanced technologies within the defense is also increasing, such as cyberspace and also cybersecurities and also communications and encryptions and so on. Those areas is really what NEC is putting our effort long terms.
Yeah, because we also talk, of course, about the AI technology boom that we're seeing, the data center investments right now. You have even subsea cable businesses. Telecom is all part of your business. How big of a chunk will that be in the years to come?
I think right now it's about 1/3 of the business is related to those kind of social infrastructure, ICT, we call, and it's growing. And last year, and our revenues, our order intakes is doubled, and that trend is continued to, and to the very strong, I think.
What is the biggest risk for your business? Are you looking at geopolitical risks?
I think geopolitical things says we have to manage it, but that is really kind of like a positive impact on us. We have to deal with it, but that's okay. I think that the biggest risk is kind of sudden changes of economic trends. It's like interest rates and also the supply chain disruptions and also regulatory changes. Those things are the kind of impacting on our kind of continuous business operations.
How close attention do you pay when it comes to market fluctuations, FX fluctuations, and how much that sort of risk poses to your business?
What do you mean by that?
Obviously, the movements in the yen is one of the sort of top topics of conversation for Japan Inc. and corporates, right? How closely do you monitor some of the market gyrations that we've seen, and is that a significant challenge to being able to model forecasts and growth for your business?
I think our business is kind of managing the sudden changes environment. And I think we can handle those type of things by taking several countermeasures.
Such as, especially because 70% of your revenue is generated in Japan, right? But you still have a lot of business externally, right? So if you see a lot of volatility in the yen from 139 to 162, for example, in just a matter of months, how do you hedge that?
Yeah, I think that for the short term, it's very difficult for the single companies to manage it. So as long as that is a kind of change is kind of gradual, and it's a very much okay for us to handle it. So I really respect the communications among the central government and the central banks to coordinate those some things. As long as that is predictable, even if it is a very sudden changes, we can handle those type of changes. But it's kind of beyond the predictable level. That's very difficult for us to do it.
That is the key question here in Japan right now, isn't it? Because even the predictability between communications between the government and the Bank of Japan, we're headed towards another election.
Yeah, but right now it's about 150, 140, 130. That's really okay for us. But,
because it's very range bound.
Yes, it's about 20 yens and those type of things. We can handle it. But if it's a kind of going down to the half of that or maybe doubled, that's impossible. We really need to transform our supply chain systems, and also we really need to consider production locations. That takes us a lot of time to change. So I think 20%, 25%, that's range. We can do it doing some kind of hedging, and also have a kind of contract and kind of adjusting for those kind of changes in the cooperation with the government and also the customers. That's fine.
What do you want to see from the government in the coming months, especially given that right now we're not quite sure how the general election will turn out on Monday and on Sunday, and if the new prime minister could get his mandate in order to pursue the changes that he wants? I
think I want the government, I believe they understand very well how important economic is. Economic is very important even for securing the peaceful world. So I think they are leading some kind of coordinated conversations and to make the economic situations, including interest rate and exchange rate, more in a predictable level of the changes. That's our hope.
Predictability, so important for business, isn't it? Takayuki, Morita, great to have you with us. Thank you so much for making the time, President and CEO at NEC. We have more ahead on the Asia Trade. This is Bloomberg.
Well, tech billionaire Bill Gates spoke to us a little bit earlier on, telling the Bloomberg New Economy event in Brazil that green initiatives need to be affordable to succeed. The Gates Foundation chair and founder of Breakthrough Energy spoke with Bloomberg editor-in-chief John Micklethwait.
You have things, particularly industrial emissions like steel, cement, that we're just building the pilot plants now. And so without governmental policy and support, the transition of the industrial emissions would slow down a lot. And, that's very unfortunate if that takes place. Likewise, in transportation, airlines are, the toughest part of all of the emissions, and they're, without support, that'll get pushed back.
Can I ask you one kind of strangely capitalism-related question? I mean, you have arguably been one of the world's, well, you've definitely been one of the world's most successful capitalists of the past 25, 30, 40 years. Last week, I sat on a stage with Donald Trump, and he said that he wanted to introduce tariffs, 10, 20% on everywhere, and his argument was this was very good for American business. In your experience, does that make sense?
No, it's certainly not the case, and the difficulty of convincing voters that free trade is overwhelmingly to their benefit. It's unfortunate how difficult it is to make that case. And so, I understand a politician who chooses to take advantage of that, but, we will suffer overall. Welfare will improve less, as not only will, if the U.S. puts tariffs on, of course, other people will put tariffs on as well, and the economic dynamism and speed of innovation will be significantly slowed.
Just to push you on that dynamism point, it's very easy to make the argument that this means higher prices for consumers, but this issue of dynamism, you've been involved in entrepreneurship, these things most of your life. If you have less foreign competition, less foreign goods, that must have an impact on it. I know it's back to a creed you've believed in, but in practice, is that argument possible to make to voters?
Well, we should find articulate politicians who can make the case. If you take most of the industries I think about, like inventing a new drug or writing a new piece of software or birthing a new climate technology, you have these gigantic fixed costs. And the fact that you can do that work and then sell it on a global basis means that everybody's getting faster innovation and lower prices. And if you start to fragment markets because of either tariffs or regulatory barriers to that trade, it absolutely takes away the lower prices and high-speed innovation.
Bill Gates speaking to Bloomberg editor-in-chief John Micklethwaite. And the latest from the corporate front, luxury retailer Hermes is expected to show the impact of the industry spending slowdown in its upcoming results. Analysts expect the weakest quarterly sales growth since 2021 on slowing Chinese demand. Bloomberg Intelligence says while Hermes is traditionally more resilient to consumption weakness, even forecasts for about 10% organic sales growth are optimistic. French fashion group Kering warns its annual profit will slump to the lowest since 2016 as weak Chinese demand hampers its biggest label, Gucci. Kering expects only $2.7 billion in recurring operating income, which is below analysts' expectations. Comparable sales at Gucci slumped 25% in the third quarter. IBM fell in late U.S. trading after disappointing sales for the third quarter, hurt by slowing consulting demand. Revenue rose 1% in the period, just missing analyst estimates. IBM's CFO says clients aren't expanding budgets and some generative AI projects are coming at the expense of traditional consulting. LinkedIn says the labor market is brimming with change thanks to the rise of AI. CEO Ryan Roslansky told us exclusively how the new technology is being used in career development as younger users fuel a content shift.
So I think a couple of the trends that we see right now are across the board, just the need for people to really upskill in what they're doing. AI skills, but also human skills, I think, are really in high demand across the board. For the first time on LinkedIn, we're seeing a lot of growth outside of kind of the core knowledge worker, and that's especially happening in India and Indonesia. So small business owners, freelancers are really starting to gravitate towards the platform. So, the more people that join 7 per second, just the more insights we have across the globe. And it's really interesting to see those patterns. But, for me, really the idea that, again, if you're not changing your job is even changing on you. It's just a really important thing for people to grasp right now, especially as AI takes more shape in the labor market.
So is the labor market resilient, for example, in the U.S.? Is there any indication to show that it is?
I think across the U.S., it feels very resilient. It feels more resilient in certain sectors like healthcare and manufacturing. It felt less resilient a year ago in tech, but tech's feeling much more resilient, especially in the AI sector, especially in Silicon Valley than it did a year ago. So I'm seeing some decent strength in the U.S. market right now.
So you talk about how the Asian market is really strong, and I can only imagine you want to grow it. What is the strategy that you want to implement in this part of the world?
One of the things I've learned for sure on this trip is just how important small businesses are in Asia. We've historically, focused the LinkedIn platform on our customer base on larger enterprises, and for us to really break through in Asia, the focus on small business is going to have to be a key. Then secondly, the labor force in Asia is, it's just a much younger labor force that is used to navigating any product, any kind of social product through video is the medium by which they consume or share content. So a real push into video as well, and short form video on LinkedIn is going to be an important way to help professionals stay informed on the platform, make connections and grow their network through video as the medium.
Right now, there's a lot of focus on the US election and perhaps AI-generated misinformation. How are you countering that on your platform?
To a large extent, LinkedIn exists as a platform to create economic opportunity. What you share on LinkedIn is attached to your real identity, your resume online. So we don't face a lot of the issues that a lot of other platforms may face where there's not real identity. But to the extent that, we still have a lot of the same, trust in place across the board, through AI and human review, things get reported. But there's not a lot of political content on LinkedIn. In fact, in 2018, we actually, disallowed political advertising altogether on LinkedIn. So it's not really a place where, politics are happening.
LinkedIn CEO Ryan Roslansky there speaking to us for Insight with Haslinda Amin, and join Haslinda for that interview in full at 11 a.m. Singapore time today. You can watch us live and see our past interviews using our interactive TV function, TV Go. You can also dive into any of the securities or the Bloomberg functions we talk about, plus become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. Do check it out. It is at TV Go. This is Bloomberg.
Bloomberg has learned that Horizon Robotics, a Chinese provider of software and hardware used in autonomous driving systems, has priced its Hong Kong IPO at the top of the range. The autonomous driving technology firm's shares are set to trade on Thursday. Bloomberg Asia Equity Capital Markets reporter Julia Fioretti joins us now with the latest. And Julia, we saw the order books recovered quickly, so we saw strong demand. But what's the trading debut going to look like?
Well, it's looking pretty strong, actually. So it did price at the top of the range, raising almost $700 million. It was also well oversubscribed, with institutional investors put in orders for about almost 14 times the amount of shares reserved for them. And in the grey market yesterday, shares soared as much as 31%. So that's certainly a positive sign for today, and it's likely to follow in that trend. And that also comes after China Resources Beverages soared 15% in its debut yesterday. So it's quite a good week for Hong Kong IPOs. There's a lot of positive sentiment and positive momentum, and it's likely to continue with Horizon Robotics given the investor demand that we saw for it.
What are we seeing in terms of who the big institutional investors are in terms of that demand right now?
So Horizon Robotics attracted quite a long list of high-profile investors. Some of them included Baillie Gifford, Norway Sovereign Wealth Fund, Wellington. In the cornerstones, it counted Alibaba and Baidu. So there was certainly quite a lot of high-profile names trying to bid for this IPO and seeking to invest in the company. And that shows that it's probably a market leader in its field, and that it's in a sector that is drawing investor interest, which is also quite significant given that we haven't really seen a large tech IPO in Hong Kong in several years, almost about 3 years now. So if it does well, this certainly is maybe not quite a turning point yet, but certainly a sign that things are getting better.
Our Bloomberg Asia Equity Capital Markets reporter Julia Fioretti there. Take a look at how broader markets are trading, as well as what we're looking ahead to in terms of the start of trading in Greater China. At the moment, we're seeing, when it comes to US futures, a little bit of upside there, about 0.25%. We did see some of the otherwise sort of lackluster sentiment being boosted with more idiosyncratic examples from tech, from the blowout quarter from Tesla, for example. We also had really impressive SK Hynix numbers out in the Asian trading day. TAIEX futures, I should say, off by about 0.25%. Will be very interesting to see how those chip makers fare, Shery.
Despite those impressive numbers from SK Hynix, Haidi, we are seeing the Kospi losing 0.2%, and SK Hynix also down about 0.5%. Samsung down more than 1%. We are seeing the Nikkei, though, recovering from 3 sessions of losses. That's it from the Asia Trade. Our markets coverage continues. The China show is next. This is Bloomberg.